3 weeks ago, in Atlanta, a 34-year-old registered nurse named Tasha sat in a Wells Fargo branch with her husband Marcus, trying to refinance their mortgage. The loan officer pulled up Tasha's credit, 712, solid, above average, not great. He gave her the numbers. At 712, her interest rate would be 7.4%. If she could get her score to 760, the rate would drop to 6.6%. Same loan, same house, same nurse, same husband, different rate. The difference over the 30-year mortgage, about $48,000. Tasha asked one question. How fast can I get to 760? He shrugged. 6 months, maybe a year. Pay everything on time. Keep your balance low. Tasha drove home that night. She did not wait 6 months. She picked up her phone. She called her credit card company. 12 minutes, 3 specific questions. 30 days later, her score was 798, almost 90 points higher. They locked the 6.6% rate. Same house, $48,000 saved. I'm Trish, and I read the fine print of the policies banks don't advertise. So the 12-minute phone call Tasha made, you can make tonight. This is the part the bank's customer service rep will not tell you. Your credit score controls more of your life than almost any other number. It determines your mortgage rate, your auto loan rate, your apartment application, your insurance premiums, even, in some states, your job applications. The data is brutal. The average American carries $6,600 in credit card debt at 22% APR. The average credit card limit is around $30,000 across all cards. The average credit utilization sits at 28%. That 28% utilization is what's keeping millions of people stuck in the 690 to 720 score range, stuck out of the best mortgage rate, stuck out of the best auto financing, stuck paying tens of thousands more in interest over their lifetime than people with 760 plus scores, for no reason other than a number nobody bothered to fix. Here's what almost nobody knows. You can fix the number in about 30 days with one phone call, for free. The reason most people don't know this, the banks have zero incentive to tell you. A higher credit score for you means worse profit margins for them. They will not volunteer the move. The customer service rep will not bring it up. The credit card statement will not mention it. The bank's app will not have a button for it. You have to know to ask. Today I'm walking you through the exact 12-minute phone call. Word for word. 3 specific asks, the mechanics behind why each one work, plus a bonus move that drops your reported utilization to nearly zero, that even Tasha didn't know about, start to finish. The whole script. One thing before the script, you need to understand why this works, because once you understand the mechanics, you'll never let your credit score sit unattended again. Your FICO score has 5 components. The biggest 2 are payment history and credit utilization. Together, they're about 65% of your score. Payment history is what you'd guess. Pay your bills on time. Don't be late. Boring. Credit utilization is the magic one. It's the percentage of your available credit that you're actually using at any given time. Here's the math. If you have one credit card with a $5,000 limit and you carry a $2,000 balance, your utilization is 40%. That is bad. The bureaus see 40% and they downgrade your score. Now imagine the same person, same balance, but the limit gets raised to $10,000. Now $2,000 is only 20% utilization. Same debt, same person, same payment history. The score jumps, often by 30 to 80 points. Within 30 to 60 days, you did nothing different. You did not pay $1 down. You did not earn more. You did not change your spending. You changed one number on the bank's side, and the bureaus rewarded you for it. Walter, the retired accountant from yesterday's video, has had an 800-plus score since the early 1990s using a related move. He pays his card before the statement closes, so the balance reported to the bureaus is essentially zero. Same mechanic, lower utilization, higher score. The system rewards low utilization. The banks know this. They just don't tell you. Now, Tasha's exact phone call. The 12-minute phone call. Tasha's exact script. Tasha's main credit card was a Chase Sapphire Preferred. She'd had it for 6 years. Always paid on time. Limit, $7,500. Average balance, about $2,800. That's a 37% utilization, the single biggest weight on her 712 score. She dialed the customer service number on the back of the card, got through to a human in about 4 minutes. Then she ran the script. Move 1. The credit limit increase request. Her exact words to the rep. Hi. I've been a Chase customer in good standing for 6 years. I'd like to request a credit limit increase on my Sapphire Preferred. Can we get this done with a soft inquiry, please? 3 things matter in that sentence. Let me break them down. 1. She identified herself as a long-term customer in good standing. That's the rep's first signal that she's worth retaining. 2. She asked for the limit increase directly. Not, is it possible? Not, could I maybe? Direct, specific. I'd like to request. 3. And this is the one nobody knows. She explicitly asked for a soft inquiry. A soft inquiry does not show up on your credit report. It does not cost you any points. A hard inquiry costs you 5 to 10 points temporarily. Some banks default to hard. Some default to soft. Many will accommodate soft if you ask. Capital One, Chase, and several others will run soft inquiries on existing customers if requested. The rep will tell you if they can or can't. If they say, we have to do a hard inquiry, you can decide whether the score boost is worth a 5-point temporary dip. Almost always, yes. The rep put Tasha on hold for 90 seconds. Came back. Ma'am, you're approved for a new limit of $15,000. That's effective immediately. Her utilization just dropped from 37% to 18% without paying down a single dollar of her balance. That alone, based on the standard scoring algorithm, was worth roughly 40 to 60 points within the next reporting cycle, about 30 days. Move 2. The APR reduction request. Tasha did not hang up. She kept the rep on the line. Thank you. While I have you, I noticed my APR is 24.99%. I've been a customer in good standing for 6 years. Can you lower my APR? I've gotten offers from competitors at much lower rates. The rep clicked through some screens. Tasha waited. This one is the move banks really do not want you to make because it directly reduces their interest revenue from you with no upside for them. The card's APR is the bank's profit margin. They will not lower it unless you ask. Roughly 50% of customers who ask get a reduction, often 3 to 5 percentage points, sometimes more. The reps have authority to drop the APR a certain amount without escalating. The script for getting them to use that authority is the one Tasha just used. The phrase that matters, I've gotten offers from competitors. Even if you haven't. The rep understands the implication. You're a flight risk. Flight risks get retention offers. Retention offers include APR reductions. The rep came back. I can lower your APR to 19.99%. That's a 5-point reduction. Would you like me to apply that? Yes. Yes, she would. On a $2,800 balance, dropping the APR by 5 points saves about $140 a year in interest. Modest by itself, but the move took 30 seconds, and it compounds for as long as Tasha has the card. Move 3. The fee waiver request. Tasha had one more ask. Maybe the easiest of the 3. One more thing. I see I had a late fee of $40 charged in March. I have a perfect on-time history except that one. Can you reverse the late fee as a one-time courtesy? The rep didn't even click. Done. Reversed, you'll see the credit on your next statement. This one is almost free for the bank. They reverse one-off late fees on long-tenured customers as a routine retention move. They will not volunteer to do it, but they will reverse it on first request, as long as your history is otherwise clean. The same script works for annual fees. I see my annual fee is $95. Can you waive that this year as a customer retention? About 40% of the time, yes, especially on premium card. That's the 3 moves. 1 phone call, 12 minutes total. Result for Tasha. Limit increased from $7,500 to $15,000. A PR dropped from 24.99 to 19.99. $40 late fee reversed. Score boost projected 40 to 70 points within 30 days. She got 86 points. Score went from 712 to 798. She locked the 6.6% mortgage rate. 30-year savings, $48,000 from 12 minutes on a phone. Bonus move. The statement, timing trick. Tasha didn't know about this one until I told her. It's the move Walter, the retired accountant, has been doing for 35 years to keep his utilization reported as essentially zero. Here's how it works. Your credit card has a statement closing date. usually 21 to 25 days before your payment due date. The balance on your card on the statement closing date is the balance reported to the credit bureaus. That's the number that determines your utilization, not the balance after you pay. The balance on the statement closing date. So even if you pay your full balance every month, like a responsible person, the bureaus may still be seeing a high utilization because they see whatever was on the card right before the statement closed. The trick is to make a payment before the statement closes. Bring the balance down to a few dollars or zero. Then the statement closes. Then the low balance gets reported to the bureaus. Walter set up an auto payment that runs 3 days before each statement closing date. His reported utilization is consistently under 2%. He has had an 820 plus score for over 30 years. This single timing change, for someone who normally carries a balance of even $1,000 to $2,000 in the middle of the month, can be worth another 20 to 40 points on top of the credit limit increase. You go to your card's website, find the statement closing date, set a one-time payment for 3 days before that date. From then on, your reported utilization is effectively zero. 2 hours of setup, permanent benefit, free. That is the entire move. Phone call plus statement timing. Tasha's two combined could be worth 80 to 120 points for the right person. From 12 minutes on the phone and a one-time setup. 3 objections come up here. Let me handle them. Objection 1. If they say no, am I worse off? Maybe slightly. If the credit limit increase triggers a hard inquiry and the request is denied, you took a 5-point hit for nothing. That's the worst case. But if you asked for a soft inquiry up front and the rep agreed, there's no downside at all. You either get the increase or you don't. Either way, your score is unaffected. For the APR reduction and the fee waiver, there's no credit pull, no downside. They either say yes or they say no. The call costs you nothing. The expected value math is overwhelming. Even if the limit increase fails 30% of the time, the average outcome of making the call is dramatically positive. People who never ask never get. People who ask usually get. Objection 2. I don't want a higher credit limit. I'll spend more. This is the David problem from earlier in the series. David from the 12 Money Drains video carries a balance and tells himself he's responsible because he makes the minimum payment. He is funding his bank's profit. The credit limit increase is not an invitation to spend more. The limit increase is purely a utilization move. You keep your existing spending. The number just changes the math the bureaus see. If you're worried about the temptation, here's the fix. Cut up the card after the increase. Don't carry it. Keep it in a drawer. The limit still counts toward your utilization ratio. The card not being usable doesn't matter. The score works either way. You get the 50-point boost. You get none of the temptation. Best of both. Objection 3. I don't have great credit. They'll deny me. Maybe. But the bar is lower than you think. If you've been a customer for at least a year and you've made on-time payments for the last 12 months, you're a likely yes for something. Maybe not a $7,500 to $15,000 jump like Tasha. Maybe a $3,000 to $4,500 jump. That still drops your utilization meaningfully. That still moves your score 20 to 40 points. If you've been late multiple times or you opened the card less than a year ago, you may be a no this round. Pay on time for 6 more months, then call, then ask. The worst answer is not yet, not no, never. There's no such thing. 3 steps. This week, none of them require any new spending. Step 1. Tonight, pull your current numbers. Log into every credit card you have. Write down, for each card, the current balance, the credit limit, the APR, and the statement closing date. Calculate your utilization on each card and across all cards combined. Total balances divided by total limit. Multiply by 100. That's your number. If your number is over 30%, you have huge upside on move 1, credit limit increase. If your APR on any card is over 22%, you have upside on move 2, APR reduction. If you've had any late fees in the last 12 months, you have a one-time waiver available on move 3. 15 minutes tonight. Step 2. This weekend. Make one phone call. Pick the card with the highest utilization or the highest APR. That's the call that moves the most. Call the customer service number on the back. Run the exact script. Limit increase first, then APR reduction, then any fee waivers. 12 minutes. Saturday morning. Done. If they say yes to the limit increase, your score will move within 30 to 60 days. No further action needed. Step 3. This month, set the statement timing payment. On the highest utilization card, find the statement closing date. Set a recurring auto payment for 3 days before that date. The amount? Pay enough to bring your balance down to 1 to 5% of your credit limit. Not zero, not the full amount. A small reported balance is actually better than zero for the algorithm. Permanent. 1 setup. Forever benefit. 3 steps. 1 phone call. 1 automated payment. Within 60 days, your score will be measurably higher, sometimes 50, 80, even 120 points higher than where you started, for free. That higher number translates directly into thousands of dollars saved on every loan you ever take out for the rest of your life. Mortgage, car, personal, refinance, insurance premiums, apartment applications. Tasha just saved $48,000 on a single mortgage from 12 minutes. You can do the same call this weekend. If this video helped you, or if you're going to make the call this weekend, do me one favor. Hit the subscribe button. New video on this channel every single day. Each one is a specific move that puts real money back in your pocket, same way this one just did. And here's what's coming tomorrow. A complete pivot from save money to look the part. You met Tasha and Marcus in this video. They're about to lock a 6.6% mortgage on their first house. They earn solid combined income. They don't dress like it. They don't post about it. They don't drive expensive cars. They look, at first glance, like nothing, which is exactly why they have the down payment. Tomorrow, I walk you through the real stealth wealth dress code, how the people quietly building real money present themselves, what they wear, what they don't wear, why a Cartier bracelet on a 28-year-old is a giant red flag, and what the actually wealthy 28-year-old is wearing instead. You can look genuinely sharp without burning $400 a month on logos. There's a specific code. Tomorrow. I'm Trish. Talk to you then.